Democracy That Delivers is brought to you by the Center for International Private Enterprise. Now, to your host.
Hello, everyone, and thank you for joining the Center for International Private Enterprise's Democracy That Delivers podcast. I'll be your host today. I'm Jenny Anderson, a program director on the Asia and the Pacific team here at SITE. Today, we'll be discussing how public climate banks in the Global South can strengthen democracy and governance. We are joined by a leading expert on this topic, Thomas Marwah. Thomas is a reader in development studies at SOAS University of London and an incoming professor in political science at McMaster University in Canada, where he'll be working towards creating a new global center for public banking. Thomas is a leading scholar of public banks. He is the author of the book, Public Banks, Decarbonization, Definancialization, and Democratization, as well as the co-author of the book, Public Banks, Public Water, Exploring the Links in Europe. Thomas works closely with and advises the Public Banking Institute, the Public Bank New York and Public Bank San Francisco groups, as well as the United Nations Conference on Trade and Development, known as UNCTAD. Thomas also sits on the Council of Europe Development Bank Award for Social Cohesion jury and is a member of the Knowledge Advisory Committee for the Finance and Common Summit Secretariat. Thank you very much for joining us today, Thomas.
No, it's my pleasure. I'm very happy to share some ideas on public banks and climate transitions and so on. So yeah, it's a great pleasure to be invited.
Wonderful. Thank you very much. It's a new topic for me, and I think for many of our listeners. So I'm excited to be able to explore this topic and have this conversation with you. Hey, could you please explain to our listeners, what are public banks and where do they exist?
Sure. No, it's my pleasure. And I think like you, oddly enough, many people in the world are not that familiar with public banks. They may not have heard of them, or they may not know they exist in their communities. But, in fact, they're really practically everywhere in the world. So a public bank simply is a bank that's owned by government or governing authority, or sometimes even by other public entities or state-owned enterprises. Or they can be a bank that has a binding public purpose mandate to fulfill a certain good in society or so on. Or it can be, a mixture of that, of ownership and control, where they'll have explicit political government or governance over the bank itself, giving that bank direction in terms of what it does and why it does. So it can be by ownership, it can be by governance, or it can be by law that makes a bank public. And there are a whole range of different types of public banks. So there are public banks that are retail banks, like your Citibank or HSBC, that take deposits and you can get a mortgage. And those are actually the most common type around the world, in the global, particularly in the global South. Then you have development banks, which are the ones that are most talked about now. And development banks you're not going to go into a development bank and open a savings account, but they'll give large-scale loans to large industry, to other banks, to municipalities, to governments. They'll be engaged in aid and development projects and so on. They're usually quite large-scale banks. And then there are public universal banks that mix both the retail side, so they'll take deposits and you can write checks out of them, and they also do the development side, so lending to agriculture, lending to housing, lending to municipalities. So there's really those three kinds of banks: retail banks, development banks, and universal banks that mix them, plus postal banks and a whole other range of public financial institutions. And they exist everywhere in the world. Presently, there are more than 900 in existence, and the numbers are growing. So there's been, I think, more than 30 new ones created in the last 5 or 6 years. And they're absolutely enormous. So combined assets of the 900 banks exceed 49 trillion US dollars. To put that in context, that's 10% greater than the GDPs of the US, Germany, and China combined. So they're absolutely enormous. They're practically every corner of the earth, yet they're relatively unknown. And so I'm glad to share some of my ideas on this today with you.
Wow, that's amazing. I had no idea.
Yeah, it's shocking. It's really shocking.
Definitely. 900 with, the amount of funds that they have, that's incredible. This is definitely an area to explore more. I think something that maybe just in discussing this previously, talking about public climate banks versus public banks, could you explain for me, for our listeners, what is the difference between a public bank and a public climate bank?
Sure. So right now, there's not, the idea of a public climate bank is a new idea, an emerging idea. There are not, many banks that are public banks, owned by government or authority that identify themselves as a climate bank right now. There are a number of funds. So there's like the Finnish Climate Fund. There's the various green funds, particularly in and around Europe. And there are a number of banks in the U.S., actually, the Green Bank of Connecticut and the iBank in California and of New York, that call themselves banks. They're really more funds. And the big difference is that, funds really get money in and they just ship it out. And they're sort of limited functions. A bank has, a greater range of financial functions. They can borrow them, money in international markets and kind of leverage the resources they have. So there's not many of those existing sort of climate banks, but there's a number of countries interested in creating them. So right now a number of us are working with Vietnam, for example, with the idea of creating a new Vietnamese climate bank with the explicit idea that this is a public bank, publicly owned, with a public mandate, laws, and so on, that is geared explicitly towards drawing in money or raising capital and redirecting it towards a whole range of climate issues, sustainability issues, mitigation and adaptation and loss and damage and so on and so forth. So quite a number, for example, like the Nordic Investment Bank has a very strong, very explicit sustainability policy. Just as one important but key element of that, they don't finance any fossil fuel-based energy anymore, as an example of what it has. And the German KfW is beginning to bend much of its lending towards the 2030 Sustainable Development Goals, the SDGs, as are a number of different multilateral development banks around the world, the ones that are owned by different governments that work regionally or internationally. Similarly, are beginning to adopt SDG alignment or alignment with the 2015 Paris Agreement. So I would begin starting to throw some of those other public banks, and some of them have been around for 70, 80 years. Some public banks, go back as long as 150 years. They're beginning to go green in a sense, to become more explicit climate banks.
Thank you, Thomas. You mentioned Vietnam, that you're looking at Vietnam as a place for a climate bank to be established. Is there a reason Vietnam? You've mentioned many European countries that are moving in this direction. Choosing a country in Southeast Asia, is there something about the country that made it appealing, or maybe could you give us some more information?
This came from the ground up in a sense. So, I would say this is still very early and there's no commitments or anything, but, as I understand, Vietnam has made international commitments towards net zero in international forums. And I believe the impetus for thinking about creating an explicit climate bank, and when they reached out to us through UNDP, United Nations Development Program, and UNCTAD, working in and through Vietnam, reached out to myself and a colleague of mine, Uli Vols at SOAS University of London, thinking, can we begin exploring some ideas around this? What would this look like in a country like Vietnam? And I think the motivation of that is really that, there are existing public banks, and large one, important one in Vietnam, both development and retail public banks. But none of them are explicitly and solely geared towards being a climate bank and developing the necessary expertise and capacity and rules and regulations to, legitimately claim yourself as a climate bank. And that was seen as something that's important for the country to be able to reach its climate net zero commitments at an international scale. So it's early days and they're curious and they want to know more about what that might look like. And, as somebody working on this is also an important question for us. We don't have a perfect model to draw from. We have some ideas around what works well and what doesn't work well in public banks and in banks in general. So how can we sort of bring those together and create an institution that is geared towards tackling the biggest challenge, of our lifetimes, and that is, how do we confront climate change in ways that are green and ways that are just?
Thank you for that explanation. Could you give me and our listeners a few examples of how public banks have gone green, and what about public banks helping with just transitions in the global south?
Sure. So I think there are different ways that public banks have gone green at different times. So you can look at something like the Banco Popular in Costa Rica. So in the global south, this is a universal bank that was created in 1969, and it's the third largest bank in Costa Rica. And it's done your standard, lending programs, through its history, but through a nationwide consultation, sort of throughout Costa Rica, reaching out to its members, to its communities, and trying to rethink its mandate and its purpose. This was, about 5-6 years ago. Out of that, they came out with a triple bottom line, and they decided to reframe the bank around a green and just and financially sustainable future for the bank. And so that was a very bottom-up process by which they got a mandate from society saying, you're a bank that it is a public bank in the country. We want it, to be target socially equitable lending, which it does. It's really links to the community, and it's a worker-owned and controlled bank, but also is governed alongside. There's government members on the board, the national board. But we also want you to go greener. So how can you, we want you to begin doing some greater lending around that. And they've done some important programs around water, for example, where they lend to local energy cooperatives specifically at cost, so that the cooperatives can go out and start protecting the energy sources, the water resources in the areas in which they're generating hydro energy in their communities, is one example. Similarly, you will see programs like the German KfW, the large, powerful development bank with 600 billion euros in assets, where it has been developing explicit programs around greening municipalities, where they match their financial resources around, lending for energy savings in cities that are matched with government policy by which they support cities through lending to find energy savings and refurbishments and so on. And then if the city exceeds their expectations, then they get, a certain levels of rebates even on the loans that they have taken, and that's matched with government policy. Or, as I had already mentioned, like the Nordic Investment Bank developing a clear sustainability policy where they just say no more fossil fuel energy, period. And they just don't fund that. And that's, really where you want to be going with these types of banks is a strong push towards reducing carbonizing energy and towards a decarbonizing future. You can, there's also much bigger, in many ways, the biggest example is the China Development Bank and its program around solar panels, solar energy, and so on. And has been a huge promoter of that, and has led to a significant reductions in the cost of solar energy. But public banks are not perfect, and they also have their issues and problems. And clearly we know, with the China Development Bank and other large development banks, there are questions that need to be asked around their otherwise, big infrastructure, house building projects, and so on. Are these truly in the interests of the environment, sustainability? So we have to look at these contradictions. They can do some really great things for the climate, and they are doing, these public development banks doing some great things, but these need to be aligned and in terms of a very strong sustainability mandate where you get really binding and clear guidance on what your lending should be doing and who you should be lending to, how you should be lending. That is pushing towards the SDGs, pushing towards Paris alignment, pushing towards green and just transitions.
Thank you, Thomas. You mentioned a few of the risks with public banks, noting China and as well as large-scale infrastructure. And since this is the Democracy That Delivers podcast, are there models of democratic governance that we can learn from and apply to climate banks or public banks?
Yeah, there's actually such a wide variety of governing models that you can look to for public banks. And I would premise this by saying that you want to look at the type of governance of a public bank in the context in which it exists and try to understand the pros and cons of that in the society in which that bank exists and why it's doing what it's doing. So that said, there you can, at a broad level, you can look at public banks. I had just mentioned the Banco Popular in Costa Rica, which by my estimation is the most democratic bank in the world, hands down. And so its highest governing board is what's called the Workers' Assembly, and it's composed of 290 members who are sent or elected to this assembly by 10 different social sectors from across Costa Rican society, from teachers associations to various trade unions to peasant organizations and business organizations, SMEs, and so on. And from that workers' assembly, then they send 4 delegates to the National Board of Directors to this bank, and then the government sends 3. So the board of directors has 3 members of government and 4 from the National Assembly, and there's a range of interactions there, and policy are made from the assembly. But equally important, very significant innovation of that bank is that they also have a women's commission. And they passed a law that basically requires that any of the major decision-making forums in that bank, be it the assembly or the board of directors or regional or local governing boards, must be at least 50% women in all the major decision-making forums, which is an amazing achievement and very, very important. So that's one model, most democratic. And you can look at the German KfW model is another one I also point to, which is more of a representative form of governance. So it has a 37-member board of directors, if I believe it, or governors. I can't remember if it's directors or governors, board of directors, where it's chaired by 2 ministers, Minister for Energy and Minister for the Economy. I don't remember exactly, but 2 government ministers chair it. And then 35 other members drawn from various political bodies within Germany, but also specified members in law, drawn from SMEs, from the other banks, from trade unions, and so forth. And so you get quite a broad-based societal representation right on the board of governors of this really powerful bank. And then there are other models. For example, in Morocco is a bank called the FEC, Fund for Communal Development or something like that, where they have a mix of national government authorities and local authorities sitting on the board of governors, and then sort of everything in between, where you get mixes of society representation, political representation, local municipal authority representation, and in different models too. They also specify expertise. So the board might require that you're an expert in risk or an expert in sustainability and so on. The important thing is that these are set in law and they're transparent and accountable. And in turn, that these banks report back openly and transparently to the society in which they're involved. So I wouldn't say there's any perfect model of governance, but there are quite a number of different models by which transparency and accountability and representation, democracy is really built into the structure of the bank.
Thinking of governance, maybe thinking about, you mentioned the different scales of public banks in the future, whether they're municipal level, national level, or even a multinational level. Why is it important? How might governance of public banks differ depending on the scale in which they operate?
Yeah, so I mean, that's kind of related to the what I was mentioning a moment ago. And this is also something we need to be attentive to. So when we're thinking about the multilateral public banks, the development banks, those will be governed really at a high level. So something like the Nordic Investment Bank, which has 8 different countries who own and control the bank. And then the member countries in the Nordic region then send basically, I can't remember the exact position, but a high-level political representative that sits on the board, and they make the decisions, at a very high level in terms of the direction of the bank and what it does. So that's, a very high-level form of governance, which is quite typical of most multilateral development banks. You'll get high-level government officials or whatever determining or shaping the future of that bank. So you don't have much of a direct connection to community or society because it's across such different societies and countries. There would be very similar issues with the European Investment Bank and so on. By contrast, the Morocco Bank that I mentioned, it has members that come both from it's a national development bank at national level, and similarly with the KfW, where they have members from the national level of government, but also that sit alongside people from various communities and municipalities who then are able to feed in the concerns of those communities. And just reflecting on the examples we've already given, then the Banco Popular really digs down even deeper, where they've created a much larger forum that draws in representation from specified social sectors within Costa Rica, from 10 different sectors that really draw from across society and give a very broad-based and very granular sort of reflection to the bank on what its needs are, what the priorities of society are, and so on. I think, again, depending what the bank does and where you want to go, you kind of have to look at these different models, and they gain in importance and expertise and capacity, that these forms of governance and democracy are really are more open to inclusion, because these transitions to decarbonized future, to just future, really need the voices of many different people in it in order to sort of bring people along. Because we might well get green transition, but unless people's jobs and ambitions and hopes are brought along with that, then the chances of a successful green transition really, and we know this from the research, are really limited, and can in some cases be reversed if we don't have the inclusive and equitable part of the transition. And I think public banks, if their governance is done right, can become a forum for that discussion and for that inclusion.
I mean, the representation, the design of the banks, the ones that you've mentioned for examples, if every public policy could be created with this sort of level of inclusion and outreach and representation, yes, I mean, these are amazing models, I think, to look at, perhaps with applicability to other areas. Mm. And you mentioned previously, and maybe just to dig a bit deeper, aligning, like we've talked about public banks and thinking specifically of Climate Bank, aligning a Climate Bank's mandates and governance. How would this bolster a bank as a climate bank, not is setting it apart from a public bank?
I think, this question of alignment is the biggest challenge we're facing right now, because historically, let's say public development banks, their mandates would often be about domestic growth and expansion, the development of infrastructure. A lot of them were geared towards small, medium-sized enterprises, agriculture. Quite a number of public development banks are focused on municipalities, supporting municipal infrastructure and so on. None of which, historically ever mentioned, decarbonization or climate or the environment. None of these were high on the radar when you're thinking post-war reconstruction or industrialization processes in the 50s, 60s. And then after the 1980s, there was, quite a push to increase profitability and so on. And none of these really had anything to do with climate. And where public banks began to shift, it was really from societies that began to push the banks in a different direction. Say, well, we've these banks and we have some concerns around water. Water is actually quite a significant motivator in a number of public banks. So, for example, in early on, in 1953 in the Netherlands, there was a huge flood, and they created the Dutch Water Bank out of that, which was geared towards sustainable water in the Netherlands. And that bank still exists, and it's rebranded itself as the Sustainable Water Bank in the Netherlands. The Nordic Investment Bank, a major push in its growth was trying to clean up the waters of the Baltic Seas due to heavy pollution and so on. So often, it's reality that are pushing these public banks to become more climate banks. And yeah, the things like the 2015 Paris Agreement, the growth or the importance of the Sustainable Development Goals from the top down, of course, are having an impact, and an important one, particularly in Europe, but also internationally, because there is a relationship. There's a lot of bilateral lending or international lending between some of the northern development banks and the global south. So I've been doing some work with the French Development Agency and a forum called the Finance in Common Summit, trying to understand what are the relationships between the multilateral development banks, like the European Investment Bank or the Asia Development Bank or the African Development Bank or the Inter-American Development Bank, and national level public banks or smaller. Are they talking about the SDGs? Are they aligning themselves with the Paris Agreement? And the answer is beginning to. But they haven't yet. But there are more and more plans to do so, and this is good news. We wish it would be faster and more, but this is a work in progress. And I would say, partly in terms of reflecting back on, it's not really a question of democratization, but it is a question of inclusion. This Financing Commons Summit that's going on to its 4th year now has become a significant forum of getting together about 500 of the world's development banks. A number of scholars are beginning to integrate into that forum, and they're also bringing in civil society organizations to open up that discussion of what can we do with public development banks. And it's really centered on questions of climate and sustainability. There's work to be done, much improvement that needs doing across the board. There's nothing inherently good or bad about public banks. They are only as good as we make them out to be, and hence the need to open up this discussion, have this discussion, and integrate it with society and include society's voices in the future of them.
So we're getting close to the end of our conversation now, Thomas. Maybe, is there anything that we haven't discussed yet, but you were really hoping to share with our listeners before we go?
Sure. I think it's important to just emphasize that you don't want to idealize public banks or vilify them, as harbingers of political corruption or that kind of thing. They really are reflections of society, and they can be made much better and worse. But there is, and this applies to private banks, cooperative banks, credit unions, as much as it does to public banks, that we do need to be vigilant around issues of greenwashing and of saying they're doing something, in fact they're not doing it. And there's a lot of gaming around climate finance now. But it is true that public banks are really punching above their weight. So there's a climate policy initiative who've been doing good work on trackable climate finance. And public banks are big, but they're only about 20% of all banks in terms of total assets. But they finance, on average, more than all private banks combined. So the data from CPI last year, for example, private banks gave about $333 billion in climate finance, and public banks just under that, $332. But the year before, $337 billion in climate finance, which was over 10% larger than the private banks, even though they're just a fifth the size. So they're really punching above their weight and are leading in terms of global trackable climate finance. And this is because of a really key issue or point about public banks, that they can be made to be policy maximizing institutions. They have a policy around climate finance, sustainability. They can work towards maximizing that rather than working towards profit maximizing. They're not as concerned about shareholder returns or even maximizing returns at all. The German KfW Bank, for example, has very low return on assets, like 0.02% or something like that, which would sink any private bank. But it's a policy maximizing bank. It is meant to do other things rather than maximize profit. And this is a very important point of how aligning the governance, the mandate, the capacity, the expertise, the knowledge, and the will. A lot of these people work in these public banks are really dedicated and civil servants in many ways, who can see, we need to tackle this problem, so let's do it. How can we do this creatively? How can we do it innovatively? But as always, those of us outside the bank, civil society and government, must hold those banks to account. And that's really where governance comes in, and the need for transparent, accountable, and representative public banks.
Wow. Thank you, Thomas. Thank you very much for this very interesting conversation. I hope we can have you back on the podcast to give us an update.
That would be great. I would be very pleased to do so.
Wonderful. Well, thank you very much for joining us on the Democracy That Delivers podcast for this very interesting conversation. And for our listeners, if you're interested to learn more about the topic, please check out Thomas's books, The Public Banks, Decarbonization, Definancialization, and Democratization, as well as the book he co-authored, Public Banks, Public Water, Exploring the Links in Europe. We'll have the links available in the podcast description. So thanks everyone for listening. Tune in next time.
Democracy That Delivers has been brought to you by the Center for International Private Enterprise. For more information, please visit CIPE.org.